Module Overview. This module serves as the critical foundation for understanding budgeting principles and how they have evolved through technological advancements. It dives deeply into the historical, theoretical, and practical framework of budgeting, examines how digital transformation has revolutionized financial planning, and provides a roadmap for adapting traditional budgeting practices to modern digital environments. The module is structured in four key sections: the evolution of budgeting practices, fundamental budgeting principles, limitations of traditional budgeting tools, introduction to the digital transformation of budgeting. This first module creates a strong base for deeper exploration of tools, automation, analytics, and systems integration in subsequent modules.
Section 1. The evolution of budgeting practices. Budgeting is not just a financial activity, it is a strategic control mechanism that dates back to ancient civilizations. From the stone tablets of Mesopotamia to modern cloud platforms, budgeting has undergone a tremendous evolution. Pre-digital budgeting, before 1980s, based on ledger books, manual tabulation, cash flow diaries. Spreadsheet era, 1980s to 1990s, the emergence of Lotus 1-2-3 and Microsoft Excel transformed budgeting into a computer-based practice. Networked budgeting, 2000s. Financial software like QuickBooks Desktop began offering local data storage and team access. Cloud-based and mobile budgeting, 2010 to present. SaaS-based tools like YNAB, Xero, and Mint provide real-time, multi-device, API-integrated, and automated features. AI and predictive budgeting, 2020s plus. The role of AI models in forecasting, anomaly detection, and behavior-based budgeting is rising. The transition from linear, static budgeting to dynamic, data-driven, and collaborative budgeting marks a revolution in how businesses and individuals approach financial planning. Section 2. Fundamental budgeting concepts and terminologies. Before engaging with software tools, a strong understanding of budgeting concepts is essential. Core terminologies include revenue, income, funds inflow from sales, services, donations, etc. Expenses, expenditures, operational and capital costs incurred, surplus/deficit, difference between income and expenses, fixed costs versus variable costs, costs that remain constant, e.g., rent, versus those that fluctuate, e.g., utility bills. Cash flow, actual movement of cash in and out of an entity. Zero-based budgeting, ZBB, every expense must be justified from zero. Rolling forecasts, continuously updated budgets over a fixed window. Variance analysis, assessment of deviations between planned versus actuals. Scenario planning, budget projections under best/worst case assumptions. Budgeting is not merely predictive but also prescriptive, helping organizations and individuals make strategic, data-informed decisions. Section 3. Limitations of traditional budgeting methods. Traditional budgeting systems such as manual ledgers or Excel spreadsheets are still widely used but pose serious limitations. Lack of real-time tracking, delayed data leads to poor financial decisions. Human error, manual entry introduces risk of miscalculations. Poor collaboration, Excel files shared via email create version control issues. Limited scenario planning, spreadsheets don't easily allow for complex modeling. Security risks. Files stored on local devices are vulnerable to loss and breach. No audit trail. Difficulty tracing who made what change and when. Static nature. Spreadsheets are not easily scalable or dynamically linked to live data. These limitations have paved the way for more agile, cloud-integrated, and automation-driven budgeting technologies. Section 4. The digital transformation of budgeting. Digital budgeting tools have disrupted traditional finance management by embedding intelligence, automation, and collaboration. Key transformations include A. Automation and smart categorization. Tools like YNAB, QuickBooks, and Tiller automate categorization of expenses, schedule recurring transactions, and generate real-time dashboards with minimal human intervention. B. Cloud-based collaboration. Modern budgeting tools are SaaS-based, enabling multiple users to access live data from anywhere, comment or approve entries, integrate with banking platforms and CRMSC, integration with APIs and third-party platforms. Modern tools allow bank feeds, payment gateways, inventory systems, and payroll modules to be linked seamlessly, reducing silos and improving operational visibility. D. Predictive and prescriptive analytics. AI-powered platforms forecast revenue trends, analyze cash flow risks, and suggest cost-cutting opportunities using machine learning. E. Digital security and compliance tools are now equipped with two-factor authentication, 2FA, encryption protocols, audit logs, and permissions control, compliance with GDPR, PCI-DSS, and other frameworks. F. Accessibility and inclusivity. Mobile-friendly platforms and intuitive interfaces have democratized access to budgeting, empowering freelancers, students, NGOs, and micro-entrepreneurs. Key learning outcomes. By the end of this module, you will be able to describe the historical evolution and strategic purpose of budgeting. Identify key budgeting concepts essential to financial planning. Analyze the limitations of traditional budgeting tools and techniques. Explain how digital tools address inefficiencies in budgeting workflows. Appreciate the transformational impact of technology on financial control, forecasting, and reporting.